two wonderful, amazing people we have here today. And every time I see their pictures, I have to tell you, my hand gets a little nervous because being a public company CEO for 17 years and 68 public quarters, I always say it's like, dog years running public companies. And these two gentlemen I've been involved with for a long time, and they actually even predate me as a CEO, which is pretty amazing and fun. Collectively, Rob and Sterling have over 50 years covering public markets and really covering the cyber markets as well. So first, what I want to introduce, Sterling Audi. Amazing. Sterling, I always loved calling you because I'd always listen to your music that you would have, and I see you have a guitar sitting behind you there. Amazing. Joining JP Morgan, I think in 1997, covering this market for a long time, my friend. I think you forgot more than all of us know in this space, and I'm so thankful for having you. And Rob Owens, Managing Director, Senior Research Analyst at Piper Sandler, although I always remember you as Pat Crest and all your Colorado adventures out there and all the great analyst events that you've covered as well. Rob and Sterling, thank you so much for joining. Take a step back. First of all, just tell everybody a little bit about what roles you guys play at JP Morgan and at Piper Sandler, just so they know what you guys do for a minute, because I know we have a lot of people on here.
Yeah, I just want to know where you got those headshots. I mean, where on the dark web did you possibly get headshots of Sterling and I over 20 years ago? So thank you for that. Sterling, I'll let you kick this off.
Well, first, Dave, thanks for letting both of us join. We appreciate it. As you mentioned, Rob and I have been doing this for a long time. We've known each other for a long time. And so for those that are not as familiar, I work for JP Morgan, so it's an investment bank, and I provide sell-side research. That means that I do research on cybersecurity companies. My research is used by institutional investors to make investment decisions around the companies that they want to own. But as part of doing that, I get a chance to interact with a huge portion of the cybersecurity industry, whether it's the vendors, whether it's people like Eric and Kevin on the distribution side, whether it's customers. So we get a real well-rounded 360-degree view of what's happening. And it's really fascinating, doing it as long as Rob and I have, to see how the industry has evolved, see the trends, but also see some of the patterns that repeat themselves with different names attached to it. But I'll leave it there, turn it over to Rob.
Yeah, so Rob Owens, 2 years with Piper Sandler and 25 years, Dave, with Pacific Crest, as you pointed out later at the end of that, acquired by KeyBank. And the role's the same for me as a sell-side analyst, kind of working with various constituencies, and have advocated for this space for 2.5 decades, effectively, both through capital raising on Wall Street, speaking to professionals in the industry and practitioners, and really trying to drive awareness relative to the problem. Now, obviously, in the last decade, I think that's changed quite a bit. We have far more public companies and surface area, if you will, to invest in, and far more awareness relative to the problem. Where I differ from Sterling, I focus just on security and infrastructure, so I've been covering that segment and mainly security for the last 25 years.
Yeah, it's awesome to have you guys. I laugh a little tongue in cheek because all those earnings scripts that I would write, and I remember just speaking, I'm like, okay, what are Rob and Sterling going to ask me at the end of this earnings script? And and then I see them right in the queue, first one's in. And it's kind of fun to reverse this a little bit and ask you guys questions. Hey, let's go back in time a little bit, because I mean, I hardly know anybody who has seen the security industry like you, Rob and Sterling. I mean, like, I talk to CEOs and people all the time, and you've seen more than I've seen, more than anybody I know have seen. Go back to, early days for a minute and just talk a little bit about what was your coverage universe like? What did you see the markets a little bit? Because that beginning tells a lot about where we're going and what's happening. I think it's pretty interesting.
Well, go ahead, Rob.
I would guess our coverage universes were pretty much the same back then, because there was very few companies in the cyber landscape. ISSX, RSA, secure
Checkpoint,
computing,
Sonic Wall.
Checkpoint, Sonic Wall, all the, you know, the early generation firewall guys. And, you know, back then it was always cybersecurity. I think we called it InfoSec at the time, and plus something else. So, you know, it's been a kind of a wild ride. And over the last decade, obviously, we've seen massive expansion in the space, both from a company perspective as well as from a spending perspective.
Well, just take a look at the RSA security show, right? In the early days, it was maybe like one or two aisles, and there wasn't that many people there. And then to see what it ballooned into in 2019, and hopefully we get back there as we get post-pandemic.
Yeah, talk about some I like to think about seminal moments in our cyber, and here you are on the other side covering all of this, right? So you actually saw the manifestation of people's like financial reporting as a result of a breach or an event or something that occurred. What jumps out at the two of you over the last 2 decades that were like, wow, that was a moment that really changed things? Love for people to hear that.
Yeah, I would say from my standpoint, probably the earliest, event was something like a code red, where it actually was the first time that operationally it took down, some financial institutions. It took some of their businesses offline where, the financial damage was considerable. And from that, or as a result of it, I know Rob and I often talk about just the evolution of, the security practitioner, and a lot of what you see today in terms of, the more senior CISO, CSO, et cetera, came as a result of that. So I think that was a seminal moment. And I think part of that was just the growth in the interoperability of networks, and the need for better performing security to keep up with it. That was something that was kind of front and center in my mind as a seminal moment. But Rob, what do you think?
Yeah, for me, there's two, Sterling. First off, I love you, and the fact I got that email about 100 times in 10 minutes from various people convinced me that, wow, there could be a problem. Now, there was no payload associated with it. It gummed up email servers, but I think we saw the weakness of certain underlying systems at that point. That really drove the AV opportunity, especially within the consumer market. Second would be kind of in that 13, 14 timeframe with Home Depot and Target. I think it was Home Depot stock that was down 10% on the announcement of some cyber issues. And it was, for me, one of the first times we actually saw a vendor's market cap negatively impacted by the announcement of a cyber attack. Now, within 2 months, I think it climbed to record highs once again on a good growth quarter. But I think it was the first time where it was a little bit more formalized, the role of the CISO and the importance of cyber. And at that point, it really got boardroom attention, in my opinion. So for me, those were the two seminal moments of my career. Number one, realizing, wow, the scale of the problem, not that many people actually loved me as I thought did. And number two, the potential ramifications on the other side with a Target and security finally getting boardroom attention.
I remember that I Love You virus, Code Red virus. I remember the Melissa virus. I've got all the names as CEO of McAfee over those years. I'll tell you one back from me. I was CEO of McAfee, and we saw all these like quantity-based viruses popped up, right? Virus, Trojan worm, it was spreading, and yeah, it started to do damage. But the real moment that hit me was that we called it Operation Aurora. We had 3 names in a row. One of them was Aurora, one was Night Dragon, one was Shady Rat. So what I always said when I go build my own company, Shady Rat wouldn't be a good name for the company. So I went with Night Dragon. But the seminal moment for me was realizing government on commercial attacks at scale had occurred, and massive campaigns were beginning to unfold, particularly with China at the time. The Aurora uncovered, I want to say, 153 attacks simultaneously into the high-tech infrastructure, one being Google, who pulled out of China. The boardroom conversations we had there, stealing source code, stealing product, inserting, sort of vulnerabilities in the products and covering it up, and like, whoa, we're in a whole new theater here in terms of what we're dealing with. And we've watched it grow. Tell me, guys, what do you guys think? Where are we right now. 2021 just ended. We saw some of the most incredible growth of valuations, and not to put you on the spot too much, but I never thought I would see companies exceeding 50 billion, 60 billion, but sometimes 70 billion in market value, in my day. Some have even predicted a potential $100 billion, market. Where do you think we're at? And do you guys think we'll see $100 billion company? What's your views on that?
I still think we're relatively early in this opportunity, Dave. And you look at operational technology, the whole OT IT convergence that's happening. You look at cloud, obviously, everything is becoming code, the software developer, and it feels like there is still tremendous opportunity, within security. Granted, covering it 20 years ago with Sterling, this was very much a cottage industry. We can talk about RSA, where Sterling and I were the only two sell-siders there at the time, slapping fives in the two aisles as we passed each other quite often. But I do think that as we look overall, just within the last year, the major ransomware attacks that we saw with Colonial Pipeline and JBS, most recently with the Log4j attack, we're nowhere near solving this problem. And now we've shifted everybody to working from home. And I think the last panelist did a nice job of talking about the fact that no one was prepared for that. Nearly 2 years later, it seems like we're still catching up from a technology perspective. So I think the opportunity is still relatively early as we look at cyber. It's becoming more present mind than the afterthought that it once was, I think, relative to IT and IT spend. So there lies the opportunity. And to the last part of your question, yeah, I do think we'll see the $100 billion company, hopefully in Sterling and Mike's careers, but probably over the next 3 to 5 years, if we just assume a normalized growth rate, and if we get through this little valuation reset based on interest rates that we've seen recently. So I see this very plausible.
Yeah, I would agree with Rob. I would say middle innings, if we're going to use a baseball analogy. I think we're kind of in the fourth, fifth inning at most. And I think the shift to the cloud is driving a couple of very interesting dynamics. Number one, the amount of compute resources that are being brought to bear is exploding. So, we're seeing kind of what we would think about the cybersecurity spend on premise needed to be is actually getting a multiplier effect as you shift into the cloud. And of course, the complexity, because you're still going to have on-premise, you're still going to have private cloud. When you start to bring all these three things together, again, I think you're getting a multiplier effect, on it. So I do think that the growth that we have, and I think it was Kevin that mentioned it in the last one, the idea of no longer is security going to be an afterthought. That was the big problem. I mean, what Rob and I were used to in the early days was you had a new functionality, a new productivity. It went out there, then it got exploited. Then there was the oh shit moment. And you went and you scrambled to secure it and lock it down. That created new opportunities for security. I think, with the idea of shift left and the move to DevOps and, constant innovation and frequent updates, et cetera, there's a much better awareness that security needs to be coincident with the development of whatever productivity is happening. And Dave, as you mentioned, just the digital transformation, I think that explosion is going to continue to drive the awareness and the demand for cybersecurity for years to come. So yes, I think we'll see the 100 billion as well. As Rob mentioned, we may have some bumps along the road. It's not going to be straight up and to the right, but I think we'll get there.
And that aligns with one of my favorite analogies, that cars could go 100 miles an hour for nearly a decade before seatbelts were mandated. I think it was a couple decades before seatbelts were mandated. Security always being that afterthought to the functionality and the experience of the user. So that's what we're starting to see change, and that's what's exciting.
Talk a little bit about it, guys. I'm really curious on your perspective, because you have such a history here. When I was running McAfee, I was really proud. I think I got the number right. We did 16 consecutive quarters of what I call triple doubles, which was we grew by double-digit top line, bottom line, and cash flow. And we were like, wow, the more of that consistency we can do, the better. Little growth, little profitability, little balance, and then we kind of moved into this era of like growth. And, I'm CEO of Fireside. I had, I don't know how many quarters of triple digit growth, but I did everything I could to grow the company as fast as I could. And then we had this concept of this rule of 40, could we create a little balance of growth and equity? Things are changing now too, right? You have a growth of, I don't know, 70, 80, I don't know, growth of 100. How are you guys seeing the balance of growth and profitability? And how are you looking at that from 2022's perspective now?
I think from my side, the first thing to understand is the scaling is happening so much faster than we had ever seen before. So the time that it takes, a cybersecurity company to go from 0 to 100 million to 500 million and now even $1 billion is happening at unprecedented rates. Now, part of that has been the availability of cheap capital that allows for the investment to bring on the resources, at a pace. Part of it is because the industry has grown at such a level, it has attracted, even though we talk about the shortage of skilled professionals to be the practitioners. I think when you look at the cybersecurity vendor industry, the salespeople, the sales engineers, the R&D, the developers, et cetera, it's attracted really good talent. So we have seen a pace of innovation, or I would say the innovation cycles have shortened tremendously. No longer was it going to take 2 to 4 years to see something monumental. We're seeing quick adaptation, and it's really helping. It's benefiting the customers as well. But we do go through cycles. Doing this as long as Rob and I have, we have seen the shift between growth only to a balance of growth and profitability. And if we do go through, a Fed tightening cycle to get on, top of inflation, you may see investors start to really open up that aperture and say, hey, you know what? I want a better balance of growth and profitability, even from earlier days. But it doesn't, it's not there right now. Right now, if you ask the average investor, they still want the focus to be on growth. So it's going to take a little time to see that shift actually occur.
Yeah, and I would agree with Sterling. You look at distribution models now, and they're more frictionless than they were before. The opportunity is far more extensible when we start to look at cloud and ephemeral workloads and things of that nature than it ever was before. And I just look at the scale of a CrowdStrike, Dave, and you obviously know George well, having worked with him. But what he's achieved is basically Symantec and McAfee's enterprise business put together. And he's achieved that in relatively little time. That's at 70% growth roughly and 32% free cash flow margin. So when we start to talk about these rules, we have a rule of 100 with a CrowdStrike, which is really crazy to think about. Now these companies are achieving scale, and I don't think they can spend fast enough. So we are seeing some of the profits fall out. If we look across all the public security companies, that rule of 40 metric, on average, the median of it is at about 39%. So we definitely see the haves, and there's some smaller companies that are in the have-not bucket, but they do generally tend to balance around the rule of 40. So I do see more of a focus now on growth and profitability. But to be honest, I think the investor mindset, I'm going to 100% agree with Sterling, is still growth focused and then profitability, especially if you achieve a certain scale.
So even though we're talking about that balance, you want that mix to still be skewed to growth.
Absolutely.
So in other words, a company, let's say you have 2 rule of 40 companies, one gets there with 30% growth and 10%, on the free cash flow margin, and the other one is 10% growth and 30% on free cash flow margin. The growth of your company will end up with a better valuation, all else being equal.
I actually have an example for you, Sterling. Checkpoint's 4% growth at 55% free cash flow margin for 59. Palo Alto is 27% growth in 2021 with 32%, or another rule of 59. And obviously Palo has a valuation well in excess of Checkpoint.
Talk a little bit about, guys, at least from my perspective as an investor now, we're seeing many more companies looking to get to public markets, right? And a lot more vehicles to get the public markets than we've ever had before. We had really one traditional model to get public in an IPO. Now we have these SPACs that you can go public through. You have other direct listing methodologies. We saw some of the largest number of listings that we've ever seen in 2021 and I don't know how you guys think about it going into 2022, but what's your views on companies going public earlier than ever before? Perhaps, any predictions of numbers of companies going public in 2022 as well, as much as I mean, do you see this as a growth year in public market access? Is it the same? Like, what's your views on what 2022 will be from a security world going public?
Well, what's interesting is even though they're going public quicker, it's not that they're going public smaller. Because of that scaling and how quickly they're scaling, they're actually larger than average. So we actually produced a report last year. We went back and looked at the 139 software IPOs from 2010 through the end of 2020 and into the beginning of 2021. And, predominantly, the revenue profile, if you will, was something in the kind of 130 million range. And they weren't profitable in the year that they were going public, et cetera. Now, you take a look at the average profile of the companies that went public over the last 12 months, they're bigger than that. They're growing faster. And they had better business models, especially compared to those in 2010. The idea of the shift to a SaaS delivered cloud, fully subscription, much better visibility, gives you better reliance to invest in a more intelligent manner and grow the business in a healthier, higher quality way. So yeah, that I think is one of the big changes. And yes, there are multiple vehicles, and it might be, many would probably say, well, Rob and I are biased. We work for investment banks. Of course, we want traditional IPOs. The one thing that I would kind of caution when you look at some of the other routes to market, they don't offer the same education and touch points. What you want when you become a public company, and Dave, you know this, you want the investor to truly know and understand the business. The better they understand it, and there's no risk-free, there's no free lunches in this world, the better they know it and can quantify the risk, the more likely that they're going to be a durable investor through both the good times and some of the choppy times that are out there. And in terms of my view on, we're going to continue to see the issuance, as long as investors have the appetite, absolutely. But, it's going to be interesting to see what happens as valuations kind of gyrate a little bit. We go through these resets, but, it's never 0 or 100. It's always somewhere in between. So we absolutely expect to continue to see pretty healthy issuance moving forward.
And I would agree with everything Sterling said. The education of the investment community in totality, both the buy side relative to partnership, as well as the sell side, who's out telling your story, who can understand if it's just a hiccup or if your story's run into a wall effectively. These companies are much higher quality, much better growth profiles than before. And I would agree with the SaaS model, which allows you to effectively touch your customer once a year versus sell a perpetual product, like 3 years of maintenance, and then hopefully you can re-engage with them as you do a major revision 3 years down the road, was not as good of a business model. And so I do think we'll probably see offerings in this space on par with where they've been the last couple of years. I think there's some interesting companies and some new opportunities that are achieving reasonable scale. And when they're mature enough, they're obviously much better capitalized than companies were 10, 15 years ago. But when they kind of achieve the scale and the narrative that they see fit, they'll go out.
Let me ask you this, guys. I'm really curious on your response to this. Aside from the traditional financial metrics, growth, top, bottom line, cash flow, things like that, what things do you guys look for that would be an indicator of great success or potentially a flaw in the company? All those little metrics that I know both of you have asked me lots of questions over the years that are much less obvious than you would traditionally look at financial statements. I'd be curious, like, what are 2 or 3 things like, oh, I'm looking for this, or I'm looking for this metric? What are some of those that the listeners could hear from you guys?
So you're looking for a view into our black box, Dave.
Exactly. That's what I want.
And I think there's a lot of metrics that that are GAAP related and non-GAAP related that Sterling and I use to either support a narrative or disprove a narrative in terms of how a company's positioned, what's the market opportunity, the scale, what does the competitive landscape look like, And then we'll often get into kind of unit economics of that next unit of sale. You know, is it giving a better margin or worse margin, and how does that play out over time? So I don't think it's really that cut and dry, to be honest with you. We're looking at the TAM of a market and not necessarily the Gartner TAM. I think Sterling and I do a lot of work on our own to understand what really that serviceable addressable market is for a company, their opportunity within that, the growth within that, the competitive landscape within that. And then we'll often use the GAAP and non-GAAP metrics to prove, disprove, support kind of the thesis around what we're thinking. So I can't give you a clean answer. Sterling, do you have one for me?
Well, what I would say is it depends on the company. And what I talk to management teams about is think about the KPIs that you run the business. So I like to see, 1, 2, 3, no more than a handful of metrics that are going to give you additional insight into the health of the business beyond just what's on the income statement, balance sheet, and cash flow. And I want the metrics that you're going to disclose to be ones that are truly reflective of the health of the business. The worst thing you can do is give something that ends up being a false indicator. Investors, like I said, are not looking for a free lunch. They're not looking for risk-free. They're looking for methods to quantify the risk. So they want to know that whatever metrics that you're going to give them, when those metrics are getting better, the company is getting stronger, it's growing faster, it's getting more profitable, et cetera. And when they're reducing, the opposite is true. Those are the things that we want. Now, that being said, we absolutely, place a premium on giving us the nuts and bolts. Can we do a P times Q? Is there a way for us to get a couple of metrics to do a price times a quantity to actually forecast revenue? You don't want your investors just to sit there and say, well, I see in your model that your forecast this company is going to grow 50% year over year. Why? You need that why. Don't put the analysts in a position to sit there, well, that's what the company said. No. We need some sort of common sense buildup that says they're hiring X number of salespeople, or, we expect this kind of net dollar retention, meaning the expansion sales into your customer base, et cetera. So I think those are some of the things to think about. But like Rob said, it's not, here's the 3 specific, metrics or items that you have to think about.
It's interesting, my perspective now as an investor and sort of former operator is I call them the 3 T's, but for what it's worth, I look at the team, the tech, and the TAM very closely. Of course, I look at all the financials, but the first thing I try to really understand is, does this team have the eye of the tiger? Do they have the experience? Do they have the energy? Do they have the capability to do? Because a lot of times you can take an asset that's, maybe not quite as good, but if you put a world-class team around it, they can make a technology really good. And then I look at technology in a lot of ways where is it scalable up and down and across oceans? Because I think about, can you go up to the biggest enterprise, but can you come down to the mid-market? Is the product able to scale up and down, which gives me a bigger TAM over time as well? Then I also can they cross an ocean, in terms of just, continental selling? Because there's a lot that goes on with that too. So it's interesting as I think about growth investments and then getting them ready to go public as well, where you guys start to see them. It's really, those 3 for me. Talk about, if you would,
Actually, Dave, if you don't mind, because I think that's such an important point, because cybersecurity has so many examples of this, that it's not necessarily the best technology that always wins. If we went back to the early days of the firewall, I would actually argue that, the secure computing Sidewinder application gateway was a hell of a lot more secure, and few in the industry would have some issue with me, but it was a proxy rather than, a pass through, but it didn't win because they just didn't have the marketing and the distribution and the execution the way that the checkpoints and the net screens and then follow on all the way up to the Palo Altos. So you're right. You have to have good enough technology to solve the problem. But yeah, that real team and the TAM are so important to the success, of a company in this space.
Yeah, I always say, at least from my perspective, I always say technology is a game of inches, which, a lot of tech is very similar, but go to market is a game of miles. And so, whoever executes the best on the go to market, oftentimes can obliterate the competition. When I was CEO of FireEye, we had Dumbala, Last Line, Fidelis, a whole bunch of companies with kind of similar capabilities as I had at FireEye, but I really put the hammer down on the go-to-market, and that differentiated us as a leader and ultimately an IPO. Guys, talk about, if you would, I think everybody wants to hear kind of categories and trends and some things that you guys are seeing from all your lenses. What do you see in 2022 that you think is like that market segment I think is coming? Is it the shift to the cloud? Is it the SASE thing? Give me a couple categories where you're like, that one there.
For me, go ahead, Rob.
I think for us, it's twofold. You obviously have major cycles that are happening within security around the three major spending areas, whether that's identity, networking, and or endpoints. Thinking a little bit in terms of what's coming next, I think the focus on the developer and the developer being center stage is really going to come into play as we think about 2022 and beyond. We've been talking shift left to the extent Sterling and I are probably getting a little sick of it with every vendor out there. But how does the traditional security vendor attack that DevOps chain, or how does DevOps really get security chops? I think is a big problem that is yet to be solved. But there's a lot of things that point back to the developer itself. And we look at all these vulnerabilities, whether they be in open source or whether they be supply chain attacks like we saw at the end of 2021. I think the developer really gets the spotlight on them as we look at the next year. Number two for us, and I think the panelists did talk about it a little bit earlier, but managed services. I think of the concept of XDR as it extends to MDR. We need to get rid of some of these acronyms, by the way, in security, because there's far too many. But as
XDR, Rob, if we didn't have all those acronyms,
right? As XDR extends back into an MDR, but then we can get into other capabilities like VM or vulnerability management, security awareness training, right? More of a holistic service that someone can provide, and taking a lot of those traditional products and actually running them for companies. I think you mentioned the mid-market, and you got the SMB opportunity. I really see that coming into play from enterprise on down as we look at 2022 and beyond. So maybe that's making use of the data itself, right? The SIM, the next generation opportunity, and whether that's in-house or, in my opinion, a lot of that's going to become outsourced. So I look for that managed services play, but to run at cloud scale and to run with cloud-like margins. I think that's where that opportunity gets far more exciting than just outsourcing someone watching your network for the weekends or beyond 5 o'clock.
Yeah, I like what you said, Rob. Developer becomes center stage. We've never seen that in 20 years of this market, right? So I think that prediction is a really good one. Sterling, what's your view on some big categories there?
Well, actually, before I go there, Microsoft actually tried. If we think about the trusted computing initiative that I think that they rolled out, I don't know, circa 2008 to 2010, somewhere in there, where they tried to push security awareness, but they tried to do it by training the developer to develop more secure code. And it's got to be more than that. It's got to be a multi-layered. But in terms of the two big categories for me, I would say first would be the service enablement of all of the edge technology. So think about anything at the edge of your corporate network that's delivered as part of a box at this point. The firewall, the application data controllers, SSL, load balancing. There's about 20 other technologies that really are just boxes that, when you think about it, is there really a reason that you have to have that as a box on premise? And the answer is no. I think you're going to continue to see, what Zscaler and Cloudflare have started. I think plenty of others are jumping on the bandwagon, and we're going to see a lot of that feature functionality just delivered, to the customer as a service. This is the one time that, ironically, the consumer model may actually get replicated in the enterprise. Think about your home. You have one box. from your cable company or from, your Fios or whatever the case may be. And then all the other services are really software enabled that are delivered on top of it. And that's directionally where I think a lot of this is headed in the enterprise. And that's really going to change things. And part of the reason why this happens is the other part, the second big category, is that shift to the cloud. As we continue to see the lift and shift of a bigger percentage of compute workloads in the enterprise moving into public cloud, like I said earlier, there's a multiplier effect in terms of what's needed to actually secure, lock down. It's everything from identity to the secure wrapper around that virtual cloud workload to the monitoring inside the cloud workload. When we talked about the seminal events, the one thing I probably should have thrown out there was, remember the Sony PlayStation attack, which was actually inside of AWS. It was one virtual, workload penetrating into another virtual workload that happened to be on the same box. These are all things that are complexities that you don't have to deal with in on-premise. And I think that really it really shakes up the competitive environment. And I'm sure we have plenty of new and emerging companies that are on here listening. This is a massive opportunity for you, because there's not that, why would you want to compete with a Palo Alto Networks for next generation firewall? Why would you want to compete with, a CrowdStrike for endpoint, et cetera? But in the cloud, you don't have that dominance yet. So it's a little bit of the Wild West, and it's a massive and fast growing opportunity that I think is going to be, great for a lot of emerging companies and technologies to take advantage of.
Yeah, Sterling, I can't agree more with you. I mean, when you look at, and I think Rob said this, you put together network, endpoint, and identity, pretty established markets. So you put cloud security suite, yeah, not nearly as established, and a massive TAM coming. Someone's going to come in there. We watched a few companies with multi-billion-dollar market valuations at very small revenue sizes emerge already, heading in that direction. Is pretty amazing that's been going on. Sorry, I didn't mean to interrupt you, Rob, there, what you're saying.
No, good.
Yeah, one of the things I was saying, and you heard me say this earlier, was I kind of think about cloud, crowd, and AI. Right. So I think, at least as I think about investing, I'm like, okay, can the company really natively build for the cloud? Can they enable what CrowdStrike did with the crowd, right? Where the neighborhood got stronger and stronger, the more clients they were able to get, and they're able to leverage crowd empowerment to do it, underpinned by ML, AI kinds of technologies. And, we're seeing some of that. Last thing I want to ask you guys, because we got to wrap up here in just a second, but there's a couple disruptive technologies that seem to be on their way that can also maybe change this thing again. So here we are with the cloud. I talked about the big shift a little bit to edge services that are going on. I would love to hear any technology, like technology itself, that you're like, wow, this is it. Whether it's 5G, or maybe it's just IoT, or maybe it's AI, or maybe it's quantum, like something jumping out at you that you're like, wow, I'm keeping an eye on that one.
I would say from my aspects, eventually it will be quantum, but we're too early. When we talk about, and this is getting really geeky for a second, but quantum computing, when you can start to talk about very fast times to break 1024-bit encryption keys, that should have taken tens of thousands of years to crack, and now suddenly you can crack it, in short periods of time. That's really going to throw, some of the security architectures and paradigms on its ear. I think the good news is we're still a ways away from true commercialization of quantum computing and the availability of it. But I do worry about one of the comments that was made in the earlier session about the capitalization of the attackers. You worry that they get there, before the protection, actually gets there. So that's going to be something. But I think in the near term, as I think about the next 12 to 24 months, absolutely 5G and IoT are the things that really stick out in my mind. Having the kind of bandwidth that 5G provides, with the ubiquity of the coverage that it promises, you're going to be able to do a lot more, and that can be scary in terms of the size of the attacks, the coordination of the attacks and where they're sourced from, et cetera. And then separately from IoT, it was actually, I don't know if you remember the nanny cam, attack that took down DIN, which is kind of a port forwarding, which, caused problems for AWS and iTunes and, a bunch of stuff. That's part of the concern when you start to think about the billions of devices that are getting connected to networks that do have some computing power, but they're quote unquote dumb, but might be able to be reapportioned to, be utilized in attacks. Yeah, I think that's something that really stands out. I think in terms of the commercial opportunity for a cybersecurity vendor, we unfortunately, the way that this market has always worked is you need unfortunately one of those big scary attacks to kind of wake everybody up, to shake up and really provide the buying motivation before you really start to see movement.
The one area that I'm keeping my eye on for what it's worth is, and very closely, is the crypto markets from a security safety point of view, especially with smart contracts, NFTs kind of popping up everywhere now. I feel like, and I think Rob, maybe you said this earlier, was, the car driving 100 miles per hour before they figured out maybe we should put a seatbelt on, right? So I kind of feel like our crypto markets here are driving at 100 miles per hour and there's no seatbelt on it yet. We're starting to see a couple of companies begin to create blockchain underpinnings that could really create a safer, more secure environment. Talk about hyperscale, big TAM, big opportunity. I see that one in the 2022, 2023, for whatever it's worth, as a pretty interesting one. Okay, last 2 minutes. What's your prediction? 2022, is it bigger than 2021? If so, how much? What are you guys thinking? Anything you can say?
From a spending perspective or from a stock perspective?
Both.
From a spending perspective, absolutely. I think that security growth probably remains, we think 8 to 12% in aggregate. It's about $100 billion product spend, and that services spends anywhere from 70 to 150 billion, depending on whose number you believe per se. But yeah, I think we're probably at a constant growth level with where we were last year, and again, 10% plus or minus 2. So it is a bigger year. If I look at returns for 21, I think we were barely in the positive. About a third of our group in security actually was in the black and the rest in the red. But those that did well did exceedingly well to bump up the averages overall. I think, 2022 again is likely to be a stock picker's year. We've got some interest rate concerns. We've got a pandemic that we're running out of Greek letters for. And I think that there's still a lot for the market to digest in of itself. So I think it's a stock picker's year, but at the end of the day, we're probably up consistent with the NASDAQ this year for this group.
Yeah, spending hands down, it's going to grow. When you throw you had mentioned the size of the government opportunity. When you start to throw the government increase in spend on top of what's happening on the commercial side, all the way down to the SMB, we're going to see a bigger budget year this year than we did last year. And in terms of the stocks, I'm 100% in agreement, with Rob. We did our 2022 outlook back on December 14th, and we kind of talked about, the concerns around inflation, Fed rate hikes that potentially could come sooner in 22 than, some of the investors realized. And if you take a look at what's happening in the market today, that's all kind of getting factored in, because remember, the market's supposed to be a discounting factor. It's supposed to be looking forward 6 to 9 months. And I think we're seeing some of that gyration. But once it settles out, this is the type of industry that I think, with everything that's going on in the growth in spending, could end up, providing some good returns. You just got to be picky.
Absolutely.
Sterling, Rob, listen, it's been an honor to chat with you guys again. I am deeply appreciative of all the work you guys do. It's amazing, all the companies you've covered, the segments you've covered, the amount of time you've done it. I think you're two of the most important people in this whole cyber industry. I'm not just saying that, you really are. Your knowledge is incredible. Thank you for coming on with me in this little show segment. I know you've got busy things to do in this world. Happy New Year to both of you.
Likewise.
And appreciate it.